Make easy money by doing simple trades. That is the title of this video, and I know exactly what you are thinking right now. Here we go. Another person telling me trading is easy, another shortcut, another promise that does not deliver. I hear you, and I am not going to insult your intelligence. What I am going to do is show you something that most traders spend years figuring out. Something that was right in front of them the whole time. Something so obvious that when it finally clicks, the first thing you feel is not excitement. It is frustration. Because you realize how much time and money you wasted looking for something complicated when the answer was always this simple. Everyone is looking for the complicated answer. The algorithm that scans thousands of stocks. The indicator with 17 parameters. The multi-time frame confluence system that takes 45 minutes to analyze a single chart. The course that costs $3,000 and comes with a private Discord group where everyone posts their winning trades and never mentions their losses. And meanwhile, the simple trade sits there, right in front of you. Obvious, clean, easy to see, easy to execute, easy to manage, and most traders walk right past it because simple does not feel like enough. Simple does not feel serious. Simple does not feel like the kind of thing that could actually make you money in a market this complex, this sophisticated, this competitive. But here is the truth that took most successful traders years to learn. Simple is not just enough. Simple is the advantage. And today I'm going to show you exactly why the simplest trades are almost always the best trades, and why the traders who learn to see them, trust them, and execute them consistently are the ones who actually build something real. Let me start with a question that every trader needs to answer honestly. Why do you make trading complicated? Not why does trading seem complicated. Why do you make it complicated? Because the market itself is not complicated. Price goes up. Price goes down. Price moves sideways. That is it. Everything else is interpretation. And interpretation is where most traders lose money. They add indicators to tell them what the price is already showing. They add more indicators to confirm the first indicators. They add filters to remove false signals from the confirmation indicators. And by the time they have finished building their system, the chart looks like a Christmas tree, and the signal they are waiting for appears once every 3 weeks. Meanwhile, the simple trade happened 7 times that week, and they missed all of them because their system was too busy confirming itself to actually produce a signal. Mark Douglas talked about this. He said that complexity in trading almost always comes from one place: the need for certainty. The more uncertain you feel about your edge, the more confirmation you seek. The more confirmation you seek, the more complicated your system becomes. The more complicated your system becomes, the harder it is to execute consistently. And the harder it is to execute consistently, the more uncertain you feel. It is a cycle. And simplicity breaks it. When your system is simple, execution is easy. When execution is easy, consistency is possible. When consistency is possible, your edge can actually express itself. And when your edge expresses itself over a large enough sample, profit follows. That is the whole chain. And it starts with simple. So what does a simple trade actually look like? A simple trade has one clear reason to exist. Not 5 reasons. Not a confluence of 7 factors all pointing in the same direction. One reason. One clear, obvious, visible reason why price is likely to move in a particular direction from this particular level. Maybe it is a key support level that has been respected multiple times. Price has come back to this level 3 times in the last month and bounced each time. Now it is back again. That is one clear reason. Simple. Maybe it is a trend. The market has been making higher highs and higher lows for weeks. Price has pulled back to the moving average. That is one clear reason. Simple. Maybe it is a breakout. Price has been consolidating in a range for 2 weeks. Volume is building. The range is tightening. Now price breaks above the resistance level with conviction. That is one clear reason. Simple. None of these require advanced analysis. None of them require 17 indicators. None of them require 45 minutes of chart study. They are visible to anyone who knows what they are looking for. And they have been producing tradable opportunities in every market on every time frame for as long as markets have existed, because here's the thing about simple patterns. They work because of human psychology, not because of mathematics. Not because of some hidden market structure that only sophisticated traders can see. Support holds because buyers remember that price bounced from this level before, and when price comes back, they buy again. Trend continuation works because momentum attracts momentum. Breakouts work because trapped traders are forced to cover their positions. These are human behaviors. They have been consistent across markets and across decades because human psychology does not change. Fear and greed were the same in 1990 as they are today. The patterns those emotions create on a chart were the same then as they are now. Simple patterns rooted in human psychology are the most durable edge in trading. Not the most exciting, not the most sophisticated, the most durable. Now let me talk about what makes the simple trade easy to execute. The simple trade is easy to execute because it is easy to define. When your entry criteria are simple, you know exactly what you are waiting for. You are not running through a mental checklist of 17 conditions. You are looking for one clear thing, and when you see it, you act no hesitation, no second guessing. No waiting for the 15th confirmation. The condition is present. You enter. That clarity removes the biggest execution killer in trading. Hesitation costs more money than bad trades. Every trader knows the experience. You see a setup, you recognize it, you know you should take it, but you wait. You want to be more sure, you want one more candle, and by the time you decide, the entry is gone. The trade ran without you. Simple systems eliminate hesitation because the entry is clear. Either the condition is met or it is not. Either you take the trade or you do not. There is no gray area to hesitate in. And with no hesitation, your entries are cleaner. Cleaner entries mean better risk to reward. Better risk to reward means your edge is working the way it is supposed to. The simple trade is also easy to manage. When you enter a trade with one clear reason, you also know exactly when that reason is no longer valid. If you entered because price bounced from support, your reason for being in the trade disappears if price closes below that support. Exit. Simple. Clean. No debate. Compare this to a trade with 7 reasons for entry. If one of those reasons stops being valid, are you still in the trade? What about 2? What about 3? At what point do you exit? The more complex the entry, the more complex the exit decision. And complex exit decisions made under emotional pressure with real money on the line almost always produce poor results. Entry. Simple management. Simple exit. That is the anatomy of the trade that actually works consistently. Now let me address the biggest resistance most traders have to this. Sysible feels like it is not enough. I understand this. You have been told your entire life that success requires sophistication, that the best solutions are the most clever ones, that if something seems too simple, you are probably missing something. But trading is one of the few areas in life where that rule is completely inverted, where the simplest approach almost always outperforms the most sophisticated one. Why? Because in trading, your biggest enemy is not the market. Your biggest enemy is yourself, your emotions, your impulses, your need to be right, your fear of being wrong, your greed when things are going well, and your panic when they are not. A complex system gives your emotions more places to hide, more decisions to second guess, more room to rationalize breaking your rules, more opportunity for your feelings to interfere with your execution. A simple system removes those hiding places. The rules are clear. The decisions are obvious. The execution is straightforward. Your emotions have almost nowhere to go. And when your emotions cannot interfere with your execution, your edge actually works. The simple pattern does what it is supposed to do. The probabilities play out. The trades add up to something real. This is why the traders who have been doing this the longest, the ones who have survived years and decades in the market, almost always gravitate towards simplicity. Not because they do not know how to build complex systems, because they learned, usually the hard way, that complexity does not produce better results. It just produces more opportunities for things to go wrong. Let me give you a framework. The simplest possible framework for finding and executing simple trades. 1. Find the trend. Is price making higher highs and higher lows? That is an uptrend. Is it making lower highs and lower lows? That is a downtrend. Is it moving sideways between 2 levels? That is a range. You know the trend in 30 seconds by looking at a clean chart with no indicators. 2. Find the level. In an uptrend, where has price pulled back to before continuing higher? That level is your area of interest. In a downtrend, where has price bounced before continuing lower? In a range, the support and resistance boundaries are your levels. Again, 30 seconds. No indicators needed. 3. Wait for price to return to the level. Do not chase price. Do not enter in the middle of a move. Wait for price to come back to your level. Patience is the edge here. Most of the work in simple trading is waiting for. Look for confirmation at the level. A rejection candle. A change in momentum. Something that tells you the level is holding. This does not need to be complicated. A strong candle in the direction of your trade at the level is enough. 5. Enter with your stop placed on the other side of the level. If price breaks through your level, your reason for being in the trade no longer exists. Get out. 6. Target the next obvious level, not a Fibonacci extension calculated to 4 decimal places, the next obvious area where price has reacted before. Simple. That is the entire system. Trend, level, wait, confirm, enter, stop, target. 7 steps. No indicators, no complex analysis. No multi-time frame confluence required, and this system executed consistently with proper risk management produces results, not because it is magical, because it is based on the most fundamental truth in technical analysis. Price remembers levels, and traders react to levels. And when enough traders react to the same level at the same time, price moves a spibble. Now here's the most important part of everything I am going to tell you today. Knowing this system is not enough. You have probably heard variations of this approach before. Support and resistance trading is not a secret. Trend following is not a secret. These concepts have been in every trading book for decades, but most traders who know these concepts are still not profitable. Why? Because they do not execute them with discipline. They understand the system and then they override it with their feelings. They know the trend is down, but they take a long trade because the setup looks compelling. They know the level is important, but they enter before price confirms it because they are afraid of missing the move. They know their stop should be on the other side of the level, but they put it closer because they want to risk less. Not understanding that a stop that gets hit because it is too tight is not risk management. It is just a faster way to lose. The system is simple. Executing it with complete discipline consistently over hundreds of trades is the hard part, not because the system is complicated, because you are complicated, because your emotions are complicated, because the gap between knowing and doing is where all of the money gets lost. This is what Mark Douglas spent his career teaching. The simplest edges in trading are already widely known. Support and resistance, trend following, breakout trading. None of this is secret. What separates the profitable traders from the unprofitable ones is not knowledge of better systems. It is the ability to execute simple systems with complete consistency, to follow the rules on every trade, to take the loss when the level breaks, to let the winner run when the trade is working, to wait patiently when there is no setup rather than forcing a trade that does not meet the criteria. That consistency is the real edge, not the system, the execution. And the beauty of a simple system is that consistent execution is actually achievable, because the rules are clear, because the decisions are obvious, because there is no complexity for your emotions to hide behind. Let me tell you what happens when you actually commit to simple trading for an extended period of time. The first thing that happens is that your entries get cleaner. Because you are waiting for obvious setups instead of forcing marginal ones, you enter at better prices with better risk to reward. The second thing that happens is that your exits get cleaner. Because your reason for being in the trade is clear, you know exactly when that reason is no longer valid. You stop holding losing trades hoping they come back. You stop exiting winning trades early out of anxiety. The third thing that happens is that your confidence grows. Not the false confidence that comes from a lucky streak. The deep, earned confidence that comes from watching your system work consistently over a large number of trades. You start to trust the process because you have seen the process work. And the fourth thing that happens is that trading becomes less stressful because the decisions are simpler, because the rules are clearer, because you are not spending 45 minutes analyzing every chart before you can make a decision. You look at the chart, you see the setup or you do not. If you see it, you take it. If you do not, you wait. That simplicity reduces the cognitive and emotional load of trading. And reduced load means clearer thinking. And clearer thinking means better execution. And better execution means better results. The simple trade is not just profitable, it is sustainable. You can do it every day, week after week, without burning out, without the emotional exhaustion that comes from trying to navigate a complicated system under pressure. Sustainable trading is profitable trading. Because you stay in the game long enough for the edge to compound, let me leave you with this. The most profitable traders I have ever studied are not the most sophisticated ones. They are not running the most complex algorithms or using the most advanced analysis techniques. They are the ones who found a simple edge, deeply understood it, and executed it with relentless consistency for years. That is it. That is the whole secret. Find something simple that works. Understand why it works. Execute it consistently. Manage your risk. Review your results honestly. Keep doing it. The money is not in the complexity. The money is in the consistency. And consistency is only possible when the system is simple enough to execute clearly every time under any market condition, regardless of how you feel on any given day. Stop looking for a complicated answer. The answer is simple. It always was. If this video shifted your perspective on what profitable trading actually looks like, hit that like button right now, stuck steward, because this is what we talk about on this channel. Not the exciting stuff, the true stuff. The stuff that actually builds trading accounts over time. And leave a comment below. Tell me how many indicators are currently on your chart. I already know most of you have too many. Tell me anyway. And then consider what your chart would look like with none. I read every single comment. Everyone. Keep it simple. Keep it consistent. Stay in the game. See you in the next video.